It's been 1 week since the whole dump started, and since then we've pretty much just been trading sideways, but I think that we're looking at a few potential situations, a little bit like this little bear flag right here, some nice support down here, resistance that we're not quite getting up to. So there's a lot to unpack in this YouTube video. We're going to be going through all of it, including if I think that we're going to be breaking down or getting back up, and some of that cool stuff. So if you're excited for that, do me a favor, smash up the likes and all that good stuff. And the first thing that I want to start with is actually just talking to you guys about support, because you guys know the deal. I've been leaning a little bit more bullish than what's been fashionable in the space. In fact, I've been showing you guys my Twitter a lot. I've been a little bit more active on here. So again, just make sure you are following me with the link down in the description. By the way, good morning, good night, guys. And and if we take a look at this tweet right here, it's fashionable to exit all crypto markets right now. It's fashionable on crypto Twitter, but of course the rest of the industry. And this is, of course, sarcasm, the single best place to get financial advice, right? Everybody and their grandmother is just flexing how they're exiting the markets right now. When, by the way, can I just remind you, if we look at our all-time high, we're down 75%. So the best time to exit the market would have been like ideally up here, right? Like if you're bragging about selling now, you're absolutely a fucking idiot. Like if you were selling right now, you should be quiet about it. It's shameful. And the thing is, guys, is that I think that because of all of this negative sentiment, we have some potential, good stuff that could be coming in our direction. I want to take a look at the long and short ratio with you guys as well, because you guys know that this is something that I do look at on occasion right here on mdxalgo.com. And if we take a look at what this has been looking like, oh, bless them, they've just removed FTX as well. This is not the data I was looking at recently, but the shorts were piling on a little bit more than the longs on Binance, and that is also the case for Bybit and some of the other top exchanges. I'm not quite sure why this data looks like this. Maybe it's because we've removed the top traders, but I think that's also something which is worth taking into account. And just kind of bringing it back a second, looking at our support levels right here, we have a really nice kind of region of support between 15.7 and 16.3, 16.4. This has been helping the market stay up, and actually I want to point out this has actually prevented a really big dump, right? We initiated quite an aggressive dump off that $21,000 level where we fell by 27% in 4.5 days, 5 days, and this is the level that stopped the dump. So obviously, look, I don't think that these are necessarily particularly great support levels as it is, but the fact that this stopped the dump is important. I think that's worth paying attention to. So for now, this is support until it breaks, and if it does break, we would potentially be looking at this coming in as resistance, and then we potentially get a kiss of death and slide all the way down deep into the crypto abyss, to shout out 𝗏𝗏𝗏𝗏. And here's the thing. I think that because people are quite bearish, we might be looking at a situation where we potentially get a little bit of a rally to the highs. The key level that I'm looking at here is this 18.5K level, because if we zoom out a little bit, this is the low that Bitcoin was setting over this last little bit in the market. And if you've been subscribed to this YouTube channel, you're going to remember that. So make sure that you are. Even if you're watching these videos regularly, a lot of you who aren't subscribed are going to be missing out on this content when it's most important. So this area previously acted as support quite nicely for Bitcoin, and now potentially starting to act as resistance. If we do go up here, what we're probably going to end up doing is actually deviating above it and then potentially coming back down. I don't know what would happen afterwards, but I do think that if we go all the way up here, we wouldn't necessarily find resistance right here. If we are going to find resistance, it would probably be just a little bit higher, getting that classic deviation, and then the price tumbles lower if we end up falling back into that range, right? And that could look something a little bit like this, and then back down, and just kind of sideways, and perhaps deviate down. And obviously this would be hell. We don't want to stay here for particularly long. If we're going to keep dropping, we want to drop down fairly quickly, but the markets don't necessarily always do that. Now, something else that I think is worth taking into account is also just some of our key areas of resistance on this chart, including the 1 hour Ichimoku cloud. This is one of my favorite indicators, as you guys know. Punch this into the YouTube search bar if you want to watch my full tutorial on how to get and use this indicator as part of the wider 𝗓𝗡lies Academy course, which you can gain access to by following these steps on screen and asking me about it. It's a direct chat with me. If you follow these steps, just pause the video. Each of the red boxes are things that you need to click. Very, very quick. No signups, no downloads required. And here's the thing. This Ichimoku cloud, when it's particularly thick, represents heavier resistance, and when it's thinner, it represents smaller, not so heavy resistance. It's pretty much closed up now, guys. I think that the market does potentially have a chance to move up a little bit higher, and this is what I like to see, because yes, I know that we have a lot of resistance, we have a lot of lagging indicators and stuff like that, but when these resistance levels start to close off, we do have what I would call windows of opportunity. Does that mean we're actually going to move up? No, obviously not. But if we have a window of opportunity, to me, that means we're more likely to move up than we were, say, over here or over here. And I think that's important to keep in mind. If we take a look at this on the 4 hour time frame, our resistance is a lot higher. And this is actually easy to see on the 1 day time frame if we look at the EMA ribbon as well. Generally, when the price is so far away from the EMA ribbon like it is right now, EMA ribbon is going to come down, price is going to move up, they're going to meet, have some fun together, and then probably get resistance, right? That's generally what we end up seeing. So we're still quite far away from our EMA ribbon. From our current price, that would be a 10% bounce. Don't think that that's impossible to pull off, considering how big this sell-off has been, and also considering what I covered in the last video where I was talking to you guys about how this market really should be much, much lower than where it is right now, in my opinion, but it just hasn't done so. And to me, I think that there is some potential bullish, conclusions to be able to draw off that. What I'm going to be looking at to potentially invalidate what I'm seeing, what I'm saying here is, seeing how these kind of resistance areas are impacting the market. So far, with our 4-hour EMA ribbon, we've been rejected constantly. It's been pretty much a 100% success rate since we established the spread, even including this, if you want to count that. Since we established a spread on the EMA ribbon where you can individually see each line, it's been very, 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 very useful, and that might continue to be the case. And so the key thing that I don't want to see right now is that if Bitcoin does fall down here, if we start to trade sideways here, that to me would mean that we are going to cascade down. And the reason I'm saying this is if you look at how Bitcoin interacted with this price level before, take a look at this. So Bitcoin got really, really quick bounces off these support levels previously, right? Really nice quick bounces right here, showing you that anytime the price dropped down here, sellers decided to lay off, and more importantly, buyers decided to step in, as we can see with the volume down here. Again, these are things that we've already covered on the YouTube channel over the last couple of days. So if you missed it, that means you're not subscribed. That means you're not being able to stay up to date with all of this amazing analysis. So go ahead and fix that if this is something that interests you. That is something I'm going to be looking out for. This is a very common pattern for Bitcoin where we kind of hit a support level, come down to it again. It's usually actually the second time that we break down. So if we do come down to this area again and just kind of trade sideways, that would be my major signal that this is about to go pretty bad. And the thing is that if this does go bad, obviously we have big price gaps on this chart. If we take a look at what we've seen here, this is easily a like a 10-11% minimum range until we hit our next areas of support, which could for me stretch between 11.6 all the way up to about 13.8. So big drop here. There isn't any support that we can find on this chart, right? If you look at what happens between, let me just drop a line here so this is quite easy to see. This is the bottom of this is where we bottomed out, and this green line represents the top of our potential support range. And if we just take a look at what the only price history that we have for Bitcoin, between these two price levels, it's what happened here, and what happened here. And if we take a look at these a little bit closer, it's very clear to see that generally whenever the price interacted with these levels, we didn't really hang about, right? We just kind of zipped straight up and then right back down and then right back up and then right back down and then right back up. And it was the same thing in all of these cases, right? So generally when the price enters these kind of what I call liquidity gaps, we're gonna go all the way up or down, depending on which direction we've entered in, right? So that includes this price action right here. I mean, I can't make this up, guys. It literally took 2 days, 3 days for Bitcoin to just cross the whole range. It's quite vicious, and so you have to expect that that's going to happen to the downside. And so this is the thing, is that you wouldn't really expect that the market can actually even get a bounce off here. Technically there's no there aren't great reasons to even expect it, but again, we start looking at things like the fear and greed index, and I think that these are telling us some really important stories right now. We're again flatlining down in extreme fear, and the last time I was telling you guys that we're flatlining in extreme fear, we ended up moving up, not only with the fear and greed index, but if you take a look at this 25th of October, if we just kind of look at where this was on the chart, let me put a line right here. That was on this candle right here. So the days before, when we were flatlining in extreme fear, if you guys were subscribed, you're going to remember that I was telling you all about how, I'm potentially seeing Bitcoin going up. I bought a little bit of Bitcoin before this pumped down at like 19.1, and then I entered a very nice long position on Bitcoin around here, rode it all the way to the top, taking profits up to 50% gain right there. It was absolutely phenomenal. Closed the rest of the position out in 30% profit. That, like all of my other trades, went inside of 𝗪fly's VIP. So if you want to be able to see what I'm doing in this market in real time, including how I handle my losses, because I am a real trader, I lose money sometimes, fuck me. If you want to see what that looks like, check it all out by following that link in the description down below for 𝗪fly's Gold. And then once you're in that channel, that's going to give you, this Telegram channel is going to give you more free analysis from myself and my team around the clock, completely free of charge, ping straight to your phone. When you're there, you can click on my name and then click on send message to ask me how to get in. But let's move it back to the charts right here. We're seeing a similar setup right now. We're at lows. There's extreme fear in the market. Things are not looking good overall, in my opinion, at all. Yet, people are still, being, really making it quite fashionable to exit the markets. Again, these are things that, just as a trader that's been in this space for more than 5 years, basically 5.5 years now, these are things that I start to really look at and pay a lot of attention to, because when people are really, really heavy on one side, and when you almost get hated, for talking about something that might happen in the opposite direction, that's where I start to really start paying attention. And I say this all the time, I'm going to say it again right now. 90% of traders, 90% of analysts, and so on, well, analysts don't necessarily trade, but 90% of traders will lose money in these markets, right? So if you find that you can put out a statement and then everybody agrees with you, that is not where you want to be. If everybody's agreeing with you, then you're probably one of the losers. It's not a good place to be, and that's why I'm quite comfortable kind of going against the grain at times like this. And timing is very important, right? You can't just always be, on the opposite side of things, because sometimes, when there is a wide consensus that the market is going to move in a particular direction, we just move there really quickly, right? So you don't just want to stand in front of a moving train, but at the same time, applying a little bit of common sense and stuff like that can take you a very, very long way. And that's why I've got these approaches in the market right now. I don't know if I'm going to be right about this. Obviously, I can't see the future, but at the end of the day, just from what I'm seeing, this is a very, very typical setup. Does it mean that we're actually going to do what I'm saying in terms of potentially targeting those highs? No. But does it mean that we're potentially, in my opinion, more likely to do so than what most people think? Yeah, that's a very, very easy yes from me. Probability doesn't mean that something is definite, but this is something that's well worth pointing out, in my opinion, right here. Something else that I want to bring to your attention is this one-day Ichimoku cloud as well. Resistance over here is way higher than where we are right now. We definitely have quite a bit of room to rise up. Not a whole lot in terms of bullish indicators, though. It's not like there's anything particularly giving Bitcoin some support right now other than this sideways range right here. But I think it would be nice to see some of these highs targeted. The other thing that I did want to cover with you guys is this potential bear flag that we've got. So let me just go ahead and remove all of these lines because we don't need them anymore. And just show you what this looks like on the 1 hour time frame. Bitcoin has, ever since dropping down, started to basically consolidate and tighten in this range a little bit, and that is generally going to be a bearish continuation pattern. In this case, looking something a little bit like this, drawing support, something a little bit like this, and then you could kind of draw the conclusion that with this sort of triangle that the price is forming, that we're kind of condensing, and then most likely going to drop to the downside. All right, we have a generally 66% chance of dropping to the downside within a bear market, and 33% chance of pumping to the upside. So this is something to keep an eye on. If we do fall back down to this level, there's a really nice kind of open pit here that you could potentially look to take advantage of. That's definitely something that I'd look to take advantage of. And if we end up breaking up, there's also a nice range here. It's not as clean, but it is something that I think looks somewhat interesting. I think that if we do manage to get up to let's say like just 18.5, it's not even that far away. That's a 10% move. And if we drop down to kind of my support range that I was talking about, that also is kind of like a 15% move away, something like that. Really, really nice percentage moves even before you start talking about applying leverage. But even with just 2, 3, 4x leverage, these turn into really, really impressive trades, right? I mean, to trade the downside down to this kind of area over here, 13% move, slap on 5x leverage. Wow, I'm really bad at math. That's hard. I think that's like 65% profit. Absolutely huge, right? And the cool thing, by the way, is that if you are signed up to exchanges like BitGet using my link in the description down below, you can take advantage of any of these moves in the market for free, basically risk-free. All you've got to do to be able to get bonuses of like $400 right here is deposit anything above 4K. And I know that that might not be, particularly achievable for many people, but as far as exchange bonuses go, this is a very, very low barrier for entry where all you have to do is deposit $4,000 or just a little bit more, trade a little bit, and you get 10% of that back as a bonus, right? Up to $400. Absolutely enormous bonus right there, guys. And you can trade with that money. You can put this in any direction you like, and that's not your money, right? BitGet is giving that to you for free. So if you make money on that, you can withdraw it. But if you don't make money, you don't have to worry. It was never your money in the first place. Bybit also offering you guys something similar, but that's going up to $30,000, which is absolutely ridiculous. So these huge bonuses, well worth taking into consideration if this is something that interests you. Basically, if you like the idea of making completely risk-free trades, then this is something worth taking into consideration. And the cool thing is that once you get these bonuses, you can withdraw your money, right? You don't need to keep your money on exchanges. I've been saying this for a long time, and I'm going to keep saying it for a long time. It's not smart to keep anything more than the bare minimum that you need to trade with on exchanges, and that's been my policy for the longest time. Unfortunately, some people need to be told that. I think this is common sense, but now that you know, So hopefully this kind of what's going on in the space right now is bringing that to your attention. Now the next thing that I want to take a look at is the dollar. It's continuing to slide a little bit lower. I think that if the dollar does take another leg down, given the fact that the market has had some time to cool off now, and the fact that bearish news keeps hitting this space every single day, right? Every day we hear of a new company that's going bankrupt, a new company that's not able to make good on their withdrawals and deposits and so on, a new company that, I don't even want to go into it, but just all this filth that's going around in the space. And Bitcoin is holding steady, guys. Bitcoin really hasn't fluctuated that much at all. I mean, it's basically just trading sideways again. It's getting boring again, dare I say. And to me, that does potentially mean that, yes, some of this kind of really bearish energy is just potentially easing off a little bit. And I think that's exciting, because if the dollar ends up moving down, and taking another leg down, this time it might be able to kind of support Bitcoin and help Bitcoin rise up a little bit, because like I've been saying, when the dollar drops down, generally indices across the world will start rallying, and the S&P 500 has been very easy to spot this on. We've actually now potentially entered a situation where we could be flipping an old area of resistance into a new area of support, and then getting ready to travel on upwards, which would be very, very exciting for the S&P 500 right here. And it's really nice to see, because the S&P 500 did make a really nice gain of 8% here within 10 days, and from here where it was trending down, it is still a 7% move up. So to be able to see a little bit of a correction, even if it drops down just a little bit more heading into the end of this trading week, that to me would mean that we are opening up the skies for some potentially really, really nice opportunities here, especially, like I said, if the dollar continues to slide lower. And I don't necessarily see any signs that this should stop just at the moment. Obviously it could do, but there's really not a whole lot of support for the dollar until it drops at least a little bit lower. In fact, we can take a look at this on the weekly time frame right here, just tracing this orange line, which represents the current price of the dollar. There's nothing really that happened here to indicate that we could find support. I think the support here would kind of start at this peak right here, which corresponds with this peak and these peaks right here. But there's not a whole lot. I mean, if we go back to the 70s and so on, like really, really far back, now we start seeing some important areas around this price level. But the kind of more, not price level, I'm sorry, these aren't prices, but around here, the more recent data over the last kind of 20, 25 years, it doesn't really show much significance. So as far as bounce zones go, I think that this green box is what we need to be paying attention to. So there is still some potential downside here for the dollar, and especially when you consider how big this rally has been. I mean, I think you could fairly reasonably argue that this is almost an overextended leg. I mean, it doesn't mean that we have to correct down massively, but generally when we overextend to the upside, we are going to correct, and so I think that would make a little bit of sense. And actually, I've just had an idea. I want to take a look at how this looks with the Fibonacci retracement. So let's go ahead and do that from our low where we started this rally up to our high. We're actually in the 382 and 3.3 pocket right now. So this actually completely just dismisses what I've said, and to me that means that actually the price should be able to potentially rally up if we're going to be in a strong uptrend. Otherwise, dropping down to 99 or 98, where 618 and 66 lines are respectively as well, could be the place for the dollar to drop down to. This is also a pretty good area of support, to be honest with you guys. I want you guys to keep this one in mind though. 382, 3.3, very, very important. These levels are literally mirrors of these. They're just a little bit lower, obviously. And if we actually bring this back on and I just drop a horizontal line in between these two, now we take the Fibonacci retracement off. Let's look at what this corresponds with. And I mean, there's also, some potential for the dollar to drop down here. I have seen this level as a target floating around on crypto Twitter and stuff like that. And I think that it does make sense. Not necessarily the best place for the dollar to drop down to. I think that this green box might make a little bit more sense. But even still, if we do end up dropping deeper, that would be a really, really nice retracement of this rally. And unfortunately, as much as I hate to say it, if we do drop down that low, I think that would be enough to really recharge the dollar for a huge rally to the upside. And I think many of you do expect the dollar to go very, very high. Unfortunately, I hate to say it, but I do as well. It's not good overall for these kind of markets, but guys, I mean, analysis is analysis at the end of the day. It doesn't really matter how I feel about it. You already know the deal. That's what we're bringing forward on this YouTube channel. And if you do appreciate that, if you do find that useful, do me a favor and smash up those likes while you're here. Also, taking a look at Ethereum against Bitcoin, this is one pair that I have been paying quite a lot of attention to over the years, really. Ethereum against Bitcoin doing okay. I think that there is some potential for some really cool stuff to happen for Ethereum right here, especially considering that we just keep seeming to find ourselves at this resistance area, which I think is absolutely great. And if we look at Ethereum against the dollar, it's not doing too badly either. One thing that I am concerned about is that Vitalik actually sold some Ethereum just a couple days ago, and he tends to time the market really well. So I have gone against Vitalik a couple times in the past, and it hasn't ended well. I'm just saying, does it mean that that it's going to go that way again? Maybe. Probably, let's be honest. But for now, I don't know. I'm not seeing what other people are seeing in the short term. Yeah, absolutely. Long term, I think we could be in for a really shitty range. But short term, I do think that some sort of more prolonged bounce would definitely surprise a lot of people. It would mean that a lot of people who are in their short positions right now will have to get out of those short positions. And as you know, if we are forced out of short positions, the only way we can close a short position is by buying Bitcoin, right? So that does increase that buying pressure in the market. And when there's limited liquidity like there is right now, the price can shoot up really quickly. And by the way, I do think that that's exactly why the price dropped down really quickly as well. It's simply because there's not a whole lot of liquidity, right? I don't necessarily think that a huge amount of people were selling Bitcoin. And in fact, something important to keep in mind, I don't know why people aren't talking about this, is that if exchanges like FTX have gone down and if people are withdrawing their money off exchanges and stuff like that, I've spoken about this before, you can't sell Bitcoin that isn't on an exchange, right? Unless you're going OTC, which most people can't do or don't even know how to do. You can't sell Bitcoin if it's not on an exchange. And equally, if your money's tied up on FTX or fucking Gemini or whoever is going bust tomorrow, you can't access your trading, right? You can't liquidate those positions, so you can't increase that selling pressure. I know that's it's not nice that we're prevented from potentially trading, but at the end of the day, that I do think that it is kind of restricting that supply a little bit, and that in itself would be really nice if demand was high. Obviously, demand isn't particularly high right now anyway, but I don't think it would take a lot to flip this. This is my point, is that I think there's a good amount of things going in Bitcoin's favor to potentially just grab some liquidity a little bit higher, and then maybe we can talk about moving down. Again, I wouldn't be saying this if everybody else wasn't so vehemently moving in the opposite direction, but for me, I'm just not comfortable siding with the masses, where every single person that I'm talking to is giving me the same copy-paste reasons for why Bitcoin has to drop lower, and I totally understand it. I think they make sense, but again, I mean, there's nothing stopping Bitcoin from grabbing liquidity a little bit higher and then continuing down. It's actually the most typical thing that Bitcoin does. It's quite easy to find examples of that, right? I mean, it happens all the time, right? Take a look at this right here. Bitcoin was going to drop down, but first, what do? We grab liquidity twice, and then we drop down, right? We do it all the fucking time. It's the most typical thing that Bitcoin does, right? Right here, take a look at this. We set resistance at $44,000, pump up above it, grab liquidity, back down. Always happens like this. Over here, we're trending down, grab liquidity, and then move down. Always happens. Does that mean it's going to happen again right now? Obviously, no, but the characteristics are very clear. And if you think that the characteristics are just going to suddenly end here, then sure, okay. But I don't, and I'm seeing a lot of people disagreeing with that right now, and that is making me even more confident. So that's what I'm looking at right now. I think that there's a chance this translates into a position relatively soon, and I am keeping VIPs updated with that as that develops, and if I do decide to make a trade, I'm not going to say what it is right now, but I will be informing VIPs about what that looks like. So if it is something that you want to get yourself into, then you can follow these links on screen to get yourself inside. And while you're down there, guys, make sure you check out these bonuses that BitGet and Bybit are offering. These are absolutely huge, enormous bonuses considering what you have to do, which is very little for BitGet. And the cool thing about BitGet, as you guys know very well, is that there is no VPN required to access it and no KYC required to use it in full. Withdrawal limits are very high. They're also releasing their proof of reserves relatively soon, which is very, very important now, of course. Bybit, very same case. They're also releasing those proof of reserves and stuff like that relatively soon. They've already done that, actually, and they're doing the 𝗪𝗪 tree soon as well. So this is something to be talking about. And of course, with these bonuses, very much well worth looking into. The other note that I want to leave you guys on just before I round this one off is that I am going to be in Abu Dhabi over these next few days for F1. So if you find yourself there and you want to meet, hit me up down below on Instagram ideally. Twitter works as well, but Instagram's going to be best. If you do want to meet up or if there's some cool stuff going on, just let me know. This was very last minute. I've had invitations for a long time, but I was turning them all down and I finally caved. So I'm going to be there. And if you want to meet up or whatever, just let me know. That would be cool. Check me out with those links down below. With that, you know what to do. If you have enjoyed this one, hit up the like, subscribe, tick the bell, do all that good stuff. And I'll see you all in the next one. Cheers.